No amount of motivation is going to change the way you feel. But if you can commit to yourself and honor your commitments and doing whatever you need to do to make sure that you reach your goals financially, then you have to reverse engineer how to do that. And one of those things for me is on the physicality aspect of it and making sure that my health is in order.
This is a story about a dude named Lane. Then one day he went and tried to rent them out, and then he became one of the best of man.
Hey, Simple Passive Cashflow listeners. Today I have Kyle Jones, one of my apartment partners. And if you guys haven't heard of him before, he was on episode 152. We talked about kind of getting started in apartment investing, but today he has a big announcement for folks. Big announcement. Kyle, what's that announcement? What's the big one?
Well, I am pulling a copycat move like you, and I quit my job, my corporate job, that is. So I have exited the corporate world, left my position at IBM, and I'm now a full-time real estate investor and entrepreneur.
So maybe for those of who will never go back and listen to episode 152, why don't you give a little synopsis of what you've been up to the last, decade of your life. Take us back so people can kind of get a little bit of background. And then I think what we're going to do here, so the value add is for a lot of listeners is a lot of you guys are right on the cusp of quitting your day job, right? But a lot of us are high paid working professionals where we make a lot of money and it's the total golden handcuffs. So at what point, what is the thought processes? What are the things that we didn't think of before we kind of pulled the plug? But Kyle, why don't you give us a little background and context here.
Sure. Yeah. So I guess a little bit about me. I'm based in Houston. I've been investing in real estate. I started probably about 8 years or so ago with single families. But really didn't start getting serious into multifamily until about 5 years ago. And then kind of fast tracking through it, we started buying properties with our own dime, through my earnings at IBM and, in sales there. And I was earning commissions and bonuses and things like that. And so was using those funds to purchase smaller multifamily before I realized that at some point you're going to run out of capital. And so I'd rather leverage the capital that I had left that wasn't tied up in equity to fund syndications and raising money and bringing investors to the table at that point so we could continue to scale the portfolio and ultimately creating enough cash flow so that I could eventually leave the corporate world, or at least have the option. My first goal was to just replace expenses. That was my first goal, build up enough cash flow where if something happened and I was let go or, global pandemic happened or whatever, I could be okay because we at least had our expenses covered. And then when that really became a reality, then it was, okay, now let me really replace my W-2 income or get close to it so that I could, if I was getting closer to it, I could see light at the end of the tunnel where if I just focused more time and effort into finding more deals and creating more cash flow, then I could personally get to that comfort level to hit the eject button. But, there's an allure in this space in podcast land and real estate guru land where it's really cool to quit your job and there's like a lore with it and everything else, which I certainly agree with. But I also think the reality is a lot of the people that you might find that do this, they weren't like me and you where we are we were high paid professionals. They were somebody who had a entry level job and they decided to go all in. Maybe they didn't have a really high risk profile. I have a wife and 3 kids. So it just took me longer to get to a point to feel comfort in the fact that I had enough cash flow and everything else. And so, kind of going off on a tangent now, but those are some of the things that I think get lost. And just because somebody says they quit their job to focus on real estate investing, sometimes there's a reality behind the scenes that doesn't, it's not a it's not a meaningful thing necessarily versus somebody who's leaving a corporate job.
Yeah, I mean, I had like a info page on this a while ago, SimplePassiveCashflow.com/quit. I don't think I ever shared that with you, but people either fall on one side of this argument, right? Do you quit your day job to go after real estate? I think you and I are aligned with that. Like, no, if you make more than 80, 100 grand a year, your highest and best use is likely at your day job. But we're in this ethos where a lot of, other people, they make under 50, 60 grand a year. And for those people, it makes total sense to, quit your day job because you're not making much there anyway, dude.
Right. You could replace that through probably 2 or 3 deals.
Right.
And be fine. And yeah, I mean, that's a predicament that I've always had. I mean, because we raise capital and, we always had investors at least that would, while you had quit your job, I think they would come and ask me, hey, when's Kyle going to quit his job? And I think there's also an aspect of it where just because I'm still working full time doesn't mean I haven't set up the appropriate measures to put a strong team in place. I mean, that's the only way that I would have been able to even do this on the side and still work a full-time job that, granted it was flexible, I worked from home for many years beyond pre-COVID and everything else. I've been working from home for 10 years. So there's flexibility in that, but there's also, an element to where if you're truly passionate about that and you're not there yet, you could go find a job that's more flexible. Because I get it, not everybody could work from home. I mean, now it's obviously different because we're in the pandemic times, but pre-COVID and maybe, 2021, when people are back in the office, they could tailor their job efforts towards finding remote capability or remote options, work from home options, if you will, to allow them that flexibility to be able to do some more things on the side, whether it's real estate or another side hustle.
One question that always comes up on, from passive investors, and it's a good question to ask, is right, like, are the sponsors this their full-time gig or not? On one side of the story, I have kind of tried to work with professionals. A lot of the partners that I choose to work with are 100K and above people who, kick butt at their day job as opposed to some random person. I don't know. I mean, when you go on LinkedIn and you see someone as an entrepreneur, I mean, it's the year 2020. That means you don't have a job. You couldn't find the job, right? So I mean, this isn't the 1990s anymore. We're all tipped off to that. But I mean, do you have any thoughts on that? I mean, there's pros and cons both ways.
Yeah. Well, I think there's a lot of relatable skills that I took from my corporate job. I mean, I've always been in sales, so there's a lot of transferable skills with just being able to build rapport, being able to sell a deal. Not only I was selling technology to cut big corporations, but I'm selling deals to investors and getting passion behind that. So also just putting a strong team together, project management skills. I mean, you have those. I have those from just the leadership skills that I developed in the corporate world. It's still putting teams together and then getting behind the team and making sure that you're staying in touch and providing oversight, but you're also not having to get into the nitty-gritty details as well.
Like, it kind of reminds me, like, when we have a deal that we closed where there's like 3 properties in there, we're splitting up the accounting, and I'm like, oh my goodness, this is just like how back at the day job where we kind of make things complicated on purpose just to confuse ourselves. It's like, here we are doing it again. Yeah. There's probably a reason why, and we're comfortable with it because we're used to that complexity in a large corporation, respecting the chain of command. I think, working with property managers and other professions is a big thing.
Yeah.
There's still a big difference between investing with somebody who, current IT worker, still working in their day job. You don't know how much of their bandwidth is going to their day job or running your deal and being a steward of their money. Some people will say, well, I'm all for funding people going after their dreams. I don't want to be the person putting in 50, 100 grand so somebody can feel it out to finally, make it on their own.
Right.
Right. So
Right.
now you can kind of fully come out and say that, right?
Exactly. It's like the chicken and the egg thing. You've got to have a track record to be able to do that. But also, if you're a high earning professional and you've got a family, you can't just jump ship. For me too. It's kind of scary. I mean, I'm doing it in the middle of this pandemic when a lot of people are unfortunately out of work. Whether the pandemic happened this year or not, I mean, nobody could have predicted it, but this was a year that I was coming into it looking at, hey, this could be the year that I leave the corporate world.
And that's what let's kind of unpack this, because this is you've been planning this for quite some time. You already mentioned you have a wife and 3 kids, so you're not just another bro who just goes to the gym a lot. You got responsibilities. Tell us about, like, I know in the beginning of like your corporate life 10 years ago, you were drinking the Kool-Aid of climbing the corporate ladder. Like, what was the mindset of Kyle Jones early 2000s?
Well, I mean, frankly,
or were you still thinking you're going to make it to the major leagues,
No, I mean, and it got tempting here as of later in my career, because I finally did have some of that tenure at IBM, and I was being looked at even executive type positions. And there were other positions that I've actually, even the last 2 years, I had actually turned down that would have set me up to be, director VP type. Yeah, going back, I mean, I definitely wanted to move through the ranks. And, my first goal was to work for an organization like IBM or a Microsoft and Oracle, which I worked at all 3 of those corporations. These are large, high-tech software organizations. I think that just mainly stemmed from my dad. So I kind of fell into the trap of just falling in line with the way that my dad did his career and handled that and went about, raising his family. And there's nothing wrong with that. I mean, I lived a good childhood. But for me, it ultimately came down to truly what freedom is. And it sounds kind of hokey, but I mean, if you're working in a corporate environment, you are working towards building somebody else's goals and dreams versus just yours. I mean, obviously there's a subset of that. And that's kind of what we're talking about now. You could develop this career path to get there. I want to be a sales manager and then a director and then a VP. So you have the hierarchy. And that's exactly what I wanted until I did see my dad get laid off, basically forced into early retirement from the company he was working for, also still a high-tech software organization. And that's really what kicked it into overdrive. And that is also the kind of just that timing of it is what I needed to just kind of get my wife on board as well. She was already supportive, but it didn't really resonate with her until I said, hey, look over here. Look what my dad's going through. Like, we need to figure this out now so that we never have to worry about this. And she got it because she saw what my dad was going through. So that was kind of like the event that kickstarted it and really shifted me into overdrive and being way more intentional about my investing, the types of deals I was looking for and things like that. It's always been about cash flow. Now we're getting to a point where we're doing maybe some heavier lifting. So there's more of an appreciation play in there, but early on and even still looking for cash flow producing deals. So just about getting multiple streams of income. So if you can get, 20, 30K hits and just kind of stack those up on top of each other before you know it, that's where you're at.
Your family is very similar to my family. Like, we both have a bunch of poor dads, right, that are still working. Both of them are still working. It's crazy. We have kind of a friendly competition when actually one of our dads is going to pull the trigger and actually invest in one of these deals. They just don't get it, right?
Yeah.
But so what is it? Some people will say it's either your family doesn't really understand what you do. Like, I think my parents still think I'm like a real estate agent. They don't understand. They still think I should have been an engineer. Or is it just like, you spent all this time building this tenure to kind of blow it away, right? Mm-hmm. Like, what is the bigger of the two?
I think in my, because I've had conversations with my dad, and I think he's always said, especially later in his career, he's encouraged me to go after this. And he said, if I had to do it over, that's what I would have done. So he's been pretty transparent about that. So in a way, I think he is, he's proud of me and, kind of stepping out and taking some risk early on. And I think he wishes he would have done some of that. So, the appetite to actually invest now at his age, I mean, he's at that retirement age where he needs to watch where he's putting his money. He can't just go, his risk profile is much different than, when it was in his 30s. But yeah, that's kind of how it's transitioned through the mindset. And it's given me more confidence and faith to go out and try to achieve this now.
So we'll get into a little bit of like, what were the things at the end that kind of tipped the scale for you as you kind of built that runway. But what are some tips to manage the workload while you're doing the W-2? Get some ideas going there.
Yeah, I definitely think I had a huge advantage just with the type of job that I had. And so that does come down to being able to work from home. And I think, there's one thing that the coronavirus has done for a lot of corporations, and that's shown them that a lot of the productivity can still be accomplished by working from home. And so I think we're going to see a lot of companies that are going to allow that more often. So take advantage of it, especially right now. If you're still sitting and working at home, take advantage of the time, because that's the only way that I was able to do it. And I had a job where, my boss wasn't breathing down my neck as long as I was taking care of what I needed to do and staying on top of, the things that were required of me. I was left alone. And so I had to stay extra diligent on the IBM stuff to kind of build up and be able to take the time to work on the side investing.
Stay off the radar, right?
Yeah, stay off the radar. And that's exactly right. I mean, whereas usually I was having a conversation with one of my former colleagues just this week when I was kind of telling him what I was doing and everything else. And that's one of the things that he mentioned. He was like, you've always done what you needed to do, but you kind of stayed off the radar. That allowed you to, do these other things. And I had confided to him a little bit. He knew I was investing in real estate. I don't think he knew to what extent, but you've got to pick. Do you want to be a passive investor or an active investor? And I think you can achieve true financial freedom through passive investing, but it's going to take working more hours at your day job to get the money to invest passively. Or on the active side, you've got to be able to work essentially 2 full-time jobs and have some nights where you stay up a little bit later or get up a little bit earlier to work on the side hustle. It's just about committing and identifying what you want, but then committing to how you're going to get it done.
So, I mean, passive investing, if you're spending more than a few hours a week researching stuff, you're doing it the wrong way. I mean, really, it should be a few hours a month from a passive investor standpoint. You just don't have the network, or you're just wasting your time on the wrong stuff. Kyle's obviously more of an active investor, but maybe you kind of break down your day a little bit, like, especially in how did you spend all the time for your family, right? Because you had to partition things. So if people are a bad passive investor and do spend too much time doing it, maybe they can kind of emulate what you did. But how much hours did the IBM thing take typically? I mean, it's safe to say now, right?
Yeah, I mean, some days it'd be a full 8 hours, some days it'd be 10, some days it'd be 4 or 5. I mean, it just depends on the day and the amount of customer calls that I had and the types of deals I was working. It wasn't always a rigid schedule, but I mean, for the most part, I stuck to my routine. And that was, one of the things that I did. I'd get up at 4 o'clock in the morning. I know you know this because, when we've been at some of those conferences, we've buddied up and my alarm goes off early, especially when your body's still on Hawaiian time. I know that's super early for you, but
I know sometimes I'm in the Dropbox and I see you getting up and I'm like, all right, I got to go to sleep now.
Yeah. So that's one of the things that that fit my schedule rather than staying up late. You've got to kind of pick. I mean, you still want to try to get some sleep where you can, but For me, it was getting to bed a little bit earlier, but waking up at an extreme time so that I could, have the runway, uninterrupted time to do the things that I did to catch up, and then, then sprinkle throughout the day. So I would spend, the first parts of my morning after I have a morning routine and everything else, doing what I need to do on the real estate stuff and catching up, and then kind of shifting gears. So compartmentalizing, shifting gears to IBM, and then usually had some calls in the morning around IBM. For the most part, if I didn't have any deals that I was underwriting that day or anything else, there might be a day where I'm not really doing anything real estate related, because the whole goal is to find a capable, efficient property manager to do the heavy lifting, so that maybe you're only spending a few hours a week, reviewing financials or reviewing your weekly reports. And yes, we have weekly calls with our property manager, but those are, we would do ours. It'd be hour and a half on Monday and an hour on Friday. So that's only really 2.5 hours of time. And then throughout the week, there were, some one-off questions. So, there's really not now tax time is more difficult. It's much more involved. I've got to be more responsive with the accounting needs and things like that, because people need their K1s and we need to be diligent with our investors. But like at a time right now in August where there's not much going on, we have some rehabs going on. So there's not a whole lot of day-to-day combat that I need to be involved with. I still get a random call every now and then from our property manager with a one-off question. It's rarely an emergency situation that can't wait for those calls. So I'm going to keep that structure in place because I want to continue to have more free time and really focus efforts in some other projects and things like that, like finding more deals or, just taking the sophistication up another notch with the way that we operate our deals. There's little things and little projects that I can take on now that I probably couldn't before.
So, how do you do you know your kid's name? Do they know you? Are you just this guy that wakes up early in the morning and crashes at 9 to 10, comes down for dinner, grabs some ready-made food, brings a bowl. How do you bring that? Do you partition a certain time for that stuff?
I do. I mean, it's a little bit easier. They're around all day now, so there's a lot of mix and match with them being home from school and then trying to take more breaks throughout the day. But also, I'm pretty rigid also on the back end of the day. I try to shut off between 5 and 5:30 and really just focus my entire efforts towards my family. I try to put my phone away as much as I can. I'm not always successful in leaving work behind. Usually if I can schedule it out, like we've done some calls in the evenings and, might go to what works. Like if you and I need to catch up and we haven't been able to catch up in the day, I don't mind scheduling a call at 8 o'clock my time, because that's when, we've generally put the kids to sleep and I can catch up real quick. I just try to keep the evenings open for my family and just be as efficient as possible throughout the day. Frankly, I don't really take a lunch break. I'll eat and then take intermittent breaks throughout the day. And I picked that up somewhere. I think it might have been the Deep Work Guy, where you don't take these long breaks. You just take like intermittent breaks on the hour. So.
I think I heard that too on some podcast like 4 or 5 years ago. Like it was some like one of these like geniuses or like some kind of like a classical musical composer. He would go in his room for like 15 minutes or 2 hours, and then he would set the timer, and then he would come back out and then just totally screw off for 20 or 30 minutes, and then like clockwork he goes right back in there. It's like the most optimal time, or everyone's a little different, right?
Yeah, no, that's kind of worked out for me, just making it more regular, I guess, versus like taking a long extended break and then you come back tired. I mean, you don't want to have a big meal because you don't want to be dragging in the afternoon. You've got to make sure that you sleep efficiently. So there's like some health components that I make sure to take care of my body and the physical aspect of it too, just so I can have the energy.
Yeah, sort of like a basketball player. He goes out, middle of the third quarter, so you can come back, 11 minutes in the fourth quarter. It's like very strategic on that type
Play
of
the whole
stuff.
fourth quarter.
Yeah. So I mean, you and I are a little different. I think when I was working, you seem to be a little more partitioned, right? Like you have phases throughout the day. Yeah, it's not always perfect, but I think I worked maybe my last 4 years in my day job. I maybe only did about a couple hours of work a day, and it was very steady. You seem to be all over the place with your W-2 job demands, but I was pretty steady. I could knock it out in a couple hours, and then it was just real estate all the time.
Yeah, we, in my job, we were still kind of at the mercy of another person's schedule. So that's a big part of it. You've got to, if you're trying to sell a customer a deal on the IBM side or sell them a product, you've got to kind of work around their schedule, cater to them. So it wasn't always perfect, but I generally tried to have some free time in there every day that was allocated towards doing something around real estate, whether it was around the operational side of it or even just trying to find new deals.
Any other tips for the W-2 working stiff out there?
For me, I kind of mentioned it just now, but I mean, it gets overlooked a lot, but the physical aspect of just taking care of your body and taking care of your health, there is no way that I could have done what I've been doing and operating with the amount of potential stress that could be there. So you just got to take care of your body. And that's not just eating right, that's exercise, but more importantly, that's also sleep. And that's what I've learned. It just all goes together. And if one thing's out of whack, it can really derail your day. I mean, if you don't have the energy, like we were just talking about, if you don't have the energy, it's not going to happen. And if you don't feel well, I mean, no amount of motivation is going to change the way you feel. But if you can commit to yourself and honor your commitments and doing whatever you need to do to make sure that you reach your goals financially, then you have to reverse engineer how to do that. And one of those things for me is on the physicality aspect of it and making sure that my health is in order. So
how many hours of sleep are you typically shooting for?
Waking up at 4, I'm usually trying to go to bed between 9 and 9:30. So it comes out to about 6 full hours of sleep. Not everybody can operate on 6 hours, but whatever you feel like your body needs, you've got to listen to your body. And there's certain things that's one thing I've actually been I had been reading up and studying sleep and just trying to better my sleep habits. And I think that's where our diet and our exercise, all that will affect our sleep. And if that's not in order, you're not going to be able to sleep efficiently.
Yeah, I've been doing like a 2:30 p.m. nap every day. There was a book called When. I don't know who wrote it, but that was the takeaway from the book. You're dragging ass anyway in the afternoon. You might as well just knock it ahead and take a nap.
Yeah, I've actually tried that and experimented with that where it's like, they say like a 20-minute nap or a 30-minute nap. And I've tried them all. I've tried 20 minutes, I've tried 30 minutes, I've tried an hour. They do not work for me. If I crash, like I'm done, I'm toast. Like if I take a nap, I'm done for the day.
Yeah.
When I wake up, I don't want to do anything.
Yeah. I'm starting to see that too. It's just, I don't like waking up. So it's like 2 times where I'm like, God dang it. Like,
yeah.
These are just ideas, guys, right? Like, I think Kyle's an early riser. I kind of tend to stay up late. From what I hear from you guys, passive investors, I think most of you guys will put your kids down to sleep at 8 or 9. Or if you're a little bit more free range kids, it's 10 or 10:30, whenever they choose. But then you guys are up from like 10:30 to 1 o'clock, 2 o'clock, doing stuff on the computer on your own. So, hey, I think the thing is just try it out, right? See what works, experiment. So let's transition to what was the final, couple of things that had to change for you to finally quit the day job? I know we had always, it's different for you. That's why I didn't understand why you didn't quit much earlier. Whether it's right or wrong, what were the things that you needed, the metrics you needed to hit to be able to pull the plug and for
Yeah,
yourself?
I think, well, one of the things that was a little bit tougher to manage was I was going to do it as long as I could, meaning work, stick with IBM and continue to do real estate to where I wasn't like super high stress, like feeling my anxiety at a high level, just like always feeling like I was just wired. And this year, more than ever, it was really starting to get to that point. I mean, we're starting to do some bigger deals, a lot more to manage and things like that. And so that was starting to intrude in my headspace. And so I knew that, especially the first deal that you mentioned, the first deal this year where we did the 3 property portfolio, I knew that was going to be a Kickstarter for me that could potentially make it happen. And so, and then we ended up and we're doing a development deal. And so, the development deal is a heavier lift. I mean, it's ground up construction. So I knew that in order for me to also be at my best from a steward of investor capital on that magnitude, it'd probably be good for me to go ahead and say goodbye. But like, I didn't just go out and do a development deal. I mean, I had set up some of these components in place. I mean, every deal that we did, it was just like one step closer to, getting to the freedom aspect of it. So I guess the metrics that I had put, I kind of mentioned them earlier. It's number 1, replacing expenses. Number 2, getting close to or having line of sight into replacing my income. Once I got to replacing my expenses, that's when I really just knew that it could be accelerated. And then, from there, we kept doing deals. I mean, a part of it too is just the work is really starting to pay off for what I have been able to do in developing relationships in some of these markets that we're investing in. And so, there's plenty of deals to underwrite and analyze and see if they fit. And so I just think about how much more could we do potentially if I was able to operate full time on all cylinders and have the headspace to just fully devote to real estate and growing the business there.
One of those things you mentioned to me was like, we get paid off asset management fee, like I think usually 1 or 2% of income generated, kind of like a property manager.
Right.
And I think the takeaway for other people is like that can be akin to your passive investments, right? Like when that gets up to be a certain amount that exceeds your monthly spend, that's kind of that's kind of the apex.
Yeah, that's definitely a part of it. So, the way that we're making money from our side is asset management fees, acquisition fees, which certainly helps, which is more, I see acquisition fees, I don't want to develop a business based on acquisition fees. I don't want to ever find myself where I have to go do a deal. That's more like bonus. That in my world, that's like closing a deal at IBM. That's your bonus. That's not your base salary.
And for a lot of larger institutional operators, that's really the only way they keep the lights on. They have like absolutely. $1 to $2 million payroll, so they need to charge 3, 4, 5% acquisition fees.
Exactly. If they're not doing deals, they can't operate efficiently, or they have to scale down. And I just never wanted to build a business based purely on that. So, and then of course the cash flow that spits off, we get the sweat equity in the general partnership, and then anything else on top of that we invest in our own deals.
But your monthly overhead is pretty low. Like me personally, I think, I mean, now my rent's really cheap. Got a couple car payments. That's about it. I mean, I'm under, my wife's a teacher, and I think I made it so all the monthly charges go through her account, and her paycheck pays it all the reoccurring expenses. I just like it because selfishly, I just like to see my account just go up. That's what I make. But, part of the key is like a low overhead, right? Personal finance overhead. Totally.
I mean, it's challenging. I mean, we take the joint account approach, my wife and I, but, we did get on the same page about setting a budget and managing our expenses, and just figuring out like how many times are we going to eat out a week? what are we going to set aside for just sludge money, fun money? What are, and then of course we've got our regular repeating expenses, but we also live. And that's the other thing. Maybe it would take somebody moving. I mean, I know there's a lot of people that are listening to this in some of the areas of the country where real estate is just super expensive. Whereas, I mean, I'm in Houston, Texas. We live in a 3,000 square foot house, and where you could get a 3,000 square foot house in another part of the country, it'd be a couple $1,000,000. And that's nowhere near what we paid for our house. And so our mortgage is very small. I mean, very small compared to a lot of people that I know that live in Hawaii or California or New York that, are paying $3,000-4,000 in rent, and they're in a 1,000 square foot apartment of some sort or something like that. So
I mean, we see it all, guys. Like we approve all investor applications before PBMs go out. And you and I see all the financial profiles of everybody. We know how much you guys make, and we know how much your net worth is. I mean, in a way, we have better oversight than CPAs since we actually know what you're investing in. And there's a stark contrast. You know who is doing it the right way in their financial budgets, and who's overspending, right? Who is a spendthrift spouse?
Yeah,
night and day.
Yeah, totally. I mean, it's. We, not to scare anybody, but we have to review that. We got to make sure that, the right people are coming into our deals. But, and you're seeing it across the country, not just people who are trying to be in a real estate professional, but you're seeing a mass exodus in some of the coastal climates. I mean, people have been moving from California to Texas for years now. People are moving from New York down to the southern states and like Florida, or they're just moving into the suburbs. So it's been happening for a while. But that might be what it takes. I mean, the property in the South and in the Midwest is cheaper than the coastal areas. That's just a fact. And so, that's an easy way to, if you are looking at this and maybe you don't have a family, or maybe you don't have maybe you do have a family, but you don't have a lot of commitments and your risk profile is pretty high and you can work anywhere you want. Why not look at living in a place that is just a lower cost of living and no state income tax and a lot of things like that are set up for you to win versus the alternative, which doesn't leave a whole lot left for you to put back to invest at the end of the day after you pay all your taxes and your high cost of living and all that other stuff.
But at the same time, Kyle and I did not make over $300,000 at our day job. So what can we say? And, I guess that's probably might be a good problem to have on the one hand, but yeah, it's going to take you a lot of passive investing to be able to replace that income. I think at least my goal for a lot of you guys is, especially if you're a higher income earner like that, is you get to a point in your mindset where you're investing, you see the light at the end of the tunnel. It's not a 20, 30-year tunnel. It might be a 5, 10, or even 12-year tunnel. And you get to a place in your mindset where you're good. You have to come to this job every day, or maybe you go to part-time, but you're not there because out of fear where, you're afraid of getting fired or you need that job, right? A pandemic comes and you're freaking out. I guess, Kyle, when did you kind of hit that point in your investing career that you maybe came over that apex of, you didn't really need the job? You're going to keep it because it's good money. It's easy money, but it just wasn't that, you didn't really need it, or you're there more, things were lighter in terms of mindset.
Yeah, I think especially on the topic of really high earning professionals, it might be challenging to get out there and really try to drum up deals, and maybe they do have a really demanding job. And so they frankly might be better fits to invest passively for now until something changes. Maybe they get a new job later on where they have a little bit more free time. Maybe they are required to be in an office right now at the moment, but down the line, they go and they get another job, or frankly, they decide that the stress of the environment that they're in is too much, and they are willing to sacrifice a little bit financially, and allows them to have more time to go find deals. But I mean, either way, I think it can be done. It's just, what is your stress tolerance? What's your risk tolerance? And what are you willing to commit to get there?
Yeah.
Yeah.
At what point when you're investing, did you kind of see the light that this was going to be your days at IBM were numbered?
Well, I mean, for me, I was thinking through it. I mean, obviously I was coming into this year knowing that this year could be the year just based on the pipeline that we had and the deal volume that we had in front of us. You know, it wasn't ever like I was running from IBM, and I still don't feel that way. I feel like I'm running towards something in real estate. Really, when we started finally closing a few of these deals that we had in the pipeline, that's when it started becoming a better reality. And once we got through a big part of the due diligence process on this development deal that we had, knew that this was probably it. And, you know, I think I shared that with you when we were doing our due diligence trip and in Huntsville, and that this could be it. And sure enough, I mean, here we are.
And April and May were a little scary. We've never been through a pandemic.
I'm happy.
Before.
I'm still a little bit nervous about it. What was that?
Oh, you know, April and May, a little bit of, stress and anxiety. We have never been through a pandemic, but after seeing collections come through, sometimes even stronger in some places.
Yeah, that was also key too, because you're right. I mean, okay, knowing what I know, I knew that this year could be the year. And so like, I was having those thoughts in March, hey, maybe this will be delayed a little bit. Maybe it's not this year, not knowing what collections would look like over the next couple months. But yeah, you're right. Collections have been where they need to be, if not better in most cases. So that certainly helped and gave me more confidence that, hey, this is actually working. This is a good, strong asset class, and it's tested, and we're testing it now. Maybe we're not through the entirety of it, but it sure feels like things are progressing, and at least at our properties.
Yeah, so things happen for a reason. Most successful people, when things happen, they understand that another door opens. So that can mean, in Kyle's case, a pandemic happens, it stress tests his theories that workforce housing works, or it could mean somebody loses their job and finds a different one that has a little bit more free time to go finally pick up some single family homes, or, even, I'm sorry if you lost a whole bunch of money in the stock market, but I'm like, well, wake up. It's a bunch of fake money out there. Easy come, easy go. It's time to start investing in real assets. But yeah, Kyle, let's wrap up here. Take us to the story. How'd you let them know? Was it just like a little handwritten note, or some people put like a bag of dicks is what some people tell them.
Oh no,
no,
there's
nothing like that. Yeah, you got
like
along
I
with
said,
your
I
folks.
wanted to. Well, there's always that what if factor. BMs, MF anybody and get out of there. But I just, it wasn't anything special. I just called my boss. Now I kind of rehearsed what I was going to say before I called him for a few minutes. But I mean, I've been rehearsing what I was going to say for a month, just said, hey, it's time for a new chapter in my life. And I'm going to start focusing on real estate investing full time. And I'm leaving the corporate world for now, and just kind of left it pretty casual and just real politically correct, real neutral. And he said, no, that's great. In fact, he might be a potential investor, because he said, hey, I'd like to learn more about that, because I've got all this money, because I'm your boss and I'm rich, and I need a place to put it. So who knows? He may or may not invest. I mean, my boss and I had a good relationship.
I think if there's one takeaway that people can glean from this, it's at least in my experience, you go through work, you have some politics. Sometimes things tick you off, but you forget about that. Right when you're outside the day job, it's just you wonder why. Like when you were in it, it was such a big issue, and when you don't have to go to the day job, you don't have to deal with all these people. It just seems a part of your life that you didn't really need to do it, and now your life can really start now, right? Yeah. Well, yeah, Kyle, thanks for joining us. You want to get your contact information out there for people to get a hold of you?
Yeah, sure. You can post in the show notes, but my email is kjones@truepointcap.com. My website is www.truepointcap.com.
All right, everybody. Well, you have to keep working a day job. That's cool. Just know that your days are numbered, and enjoy it. Right, whether you're working a day job or not. Life's short. So, all right. See you guys.
This website offers very general information concerning real estate for investment purposes. Every investor situation is unique. Always seek the services of licensed third-party appraisers and inspectors to verify the value and condition of any property you intend to purchase. Use the services of professional title and escrow companies and licensed tax, investment, and or legal advisor before relying on any information contained herein. Information is not guaranteed, as in every investment there is risk. The content found here is just my opinion, and things change, and I reserve the right to change my mind. Above all else, do your own analysis and think for yourself, because in the end, you are the only person who is going to look out for your best interests.